Hi there, welcome to Market Call. I'm Andrew Bell in today for Morella Fernandez. Our guest taking your questions is Kim Bolton, President and Portfolio Manager at Black Swan Dexteritas, and the topic, technology stocks. You can call us toll-free, 1-855-326-6266, or email us marketcall@bnnbloomberg.ca. Great to see you. Thanks very much for joining us.
Yeah, good to see you, Andy.
Let's put up maybe a 5-year chart for the NASDAQ 100 or the NASDAQ Composite. We know it soared in 2021. 2022 was a horrible period. But since we've gone back close to record highs again.
Our funds were probably down between 15 and 20%, like only 2 months ago. And now we're up 2 or 3. So not without some active management, and certainly on the separately managed accounts, we're above water.
What has got momentum back into the tech stocks? I know the whole market has been moving back up.
Well, it was it was that 90-day pause that started the whole thing. Everyone was fixated on tariffs and trade, and they sort of took their eye off of the sort of whole AI revolution, right? Remember that? That was the end of the year, back in January, and then the whole tariffs thing came along. But now that that's sort of calmed down, everyone said, so what's the main theme and trend out there? And it's the generative AI and the agentic AI agents and so on. And so it just sort of changed course, which was smart.
Sorry, Kim. Is heavy spending on AI continuing? Has there been any sign of a pullback, for example, in the data centers?
Yeah, coming out of the first quarter earnings, they maintained their spend, the capex, and so the capex, the capex not just for the infrastructure, the hyperscalers and data centers and so on, but then. It's sort of last year, it morphed over into the CapEx in modeling. And then this year, it's all about the applications. And that's where the whole agentic AI and the agents came along.
What is modeling in this context, Kim?
Oh, okay. So large language models.
Okay.
So the big hyperscalers who have the massive amounts of data. So they put their people to work with the new GPUs and what NVIDIA and Broadcom have, and AMD, that could do the computational work a lot faster and cheaper. And now the prices are starting to come down. But there's still an issue when it comes to the power side. So it's the computational work that can be done now that actually led to the whole modeling. And then the models are like massive libraries, right? That people can access. So they can access the whole library, or specific industries can access, whether it's healthcare or educational or engineering or on that side.
And you mentioned agentic AI. What is that, Kim, please?
Oh, okay. So I remember, it was back in November of 2022 when the whole generative AI just started. Then they had to do the infrastructure. And then the agentic AI is where it's sort of like autonomous vehicles, right? Remember when everyone said, and Elon was saying that eventually you'll just be able to sit back and the car will just drive itself. Well, that was the whole idea of the agentic AI. The agentic AI could actually learn and understand and interpret and give guidance to you and I. They're getting there, but sort of like autonomous vehicles, they still need human intervention.
Still need someone, but it's an exciting time.
Oh, it is.
Kim.
Yeah.
Kim Bolton is our guest on Market Call today, and he's taking your questions on technology stocks. There's that number, 1-855-326-6266. Okay, so we have an email from Dave. Dave is asking, Kim, can I get your opinion on Docebo? Greatly appreciated. So they're all about training customers, I believe, to use your software and also training employees?
Yeah, and it's a very, very competitive field. And as a result, the sort of margins have come in. So currently trading right around, 36 and a quarter. The average analyst has this price target out there of about $74, which I think is a bit dreaming. Mm-hmm. But we've just sort of stayed away. It's such a crowded place, and as a result of being very, very crowded, and some of the big guys being involved in it, we've just sort of stayed away.
Okay, too many. What is it? The old Red Sea. Lots of competitors. You want to be in the blue ocean where there are too many participants. John is calling from London, Ontario. Go ahead, John.
Hi, Andrew. Hello, Kim.
Hello.
Kim, I'm a longtime owner of Visa. In fact, I bought it at the IPO, and it's done very well, and it has that fintech, that word I love. Recently, over the past 2 days, there have been, I think Friday and again today, it's been down because of fears over a crypto coin issued by the U.S. Do you think that's just a little blip on the rise to fame for Visa, and should I hold or should I add? Mm-hmm. Thanks very much, Kim. I appreciate your opinion.
Thank you very much.
Thanks, John. They just passed the other night. Was it last night? The out of the U.S. Senate about the stable coin.
Right.
And that, the expectations of that being passed, yes, weighed on Visa. But I actually think it was more about what was going on in the Middle East between Iran and Israel, and it just pulled. You could see it in the airlines. Mm-hmm. Airlines came down, and therefore people were concerned about the spend that was going to happen. So currently, right now, trading around, it's off 3% today at 346, and we have a 12-month price target of 365. So it hasn't got that much of a runway here.
Mm-hmm. Oh, okay. It's interesting. I mean, we've heard concerns expressed about these stable coins, that they could be a source of instability in the financial system. But
absolutely.
America just pushing ahead with them anyway, it seems.
Well, and the fellow on the throne is very, very engaged in it too, right? And he's got a lot of his fellow people from the sort of crypto market that have come in and are banging on the drum.
Ralph is in Calgary. Go ahead, Ralph, please.
Thank you for taking my call.
Okay.
Quantum Computing Incorporated, QUBT, has moved up significantly since Kim mentioned it a month ago. And D-Wave Quantum, QBTS, has been flat. Please comment on the relative characteristics of these two companies and their prospects going forward.
Right. Quantum computing, the actual company, obviously it'll be a while before we actually see sustainable profits, I would guess, from these companies. Yes,
but us in the market, you and I and all the other people, it's all about future values. So this is why it's so popular. You look at our computers. Once quantum computing comes along, we're going to be getting all new hardware. Because again, it's all about computational workloads that can be done quicker, right? So in the classical world, the computers work off memories and workloads of 0 and 1s. And the whole idea of the quantum computing is that you can slice and dice it between 0s and 1s. And if you can do that, if you're not just using 0 and 1s and you're using these qubits in between, you can do a lot more computational power. That's what it's all about. Now, there's different ways of approaching it. Quantum computing, for example, is involved in the photon quantum computing, using photons instead of electrons to perform the computations. That's what they're all about. So right now, 1980-ish, it was about a month ago, and Ralph, you probably saw it. We were just sort of lucky. We bought it. We had a small position, like 1.5% across quantum computing, D-Wave, and Iconic. And then the next day, everything just sort of popped, and because there's just new news. Now, when it comes to price targets on this, recognize that these companies are not profitable. So it's not pie in the sky. It's real stuff that they're doing, and it will become, as time goes on, like any sort of technology. The more and more you do it, and you can get scale out of it, the price of it will come down. It's just too darn expensive right now. So what I'm getting at is that it's very, very difficult to actually put price targets, especially on something that is not profitable, and then is really sort of looking into the future of 2, 3, 4 years. So would I own it? Absolutely, I do. And there's a fourth one, Rigetti. So Iconic, D-Wave, quantum computing, and Rigetti. I would recommend just get a small position so that it's on your radar, because it's going to be a big focus in the next few years.
It's pretty amazing, all right, the power of these systems that are coming. We've got to take a break. Kim Bolton of Black Swan Dexteritas is taking your questions on technology stocks. 1-855-326-6266. We have an email here from Gail. Gail asks, is Microsoft likely to be a long-term compounder after a bear market is over? Not sure what Gail's getting at there, but is Microsoft likely to be a long-term builder of value, do you think, Kim?
Well, in our fund, and I would say in all of our separately managed accounts, Microsoft would definitely be in the top 5, if not the top 3. So currently, right now, trading at around 479. The runway is a bit skinny or short because we have a 12-month price target of 514. So, you get another $30 out of it, but a phenomenally well-run company with the visionary leadership of Satya Nadella. The company boasts dominant moats in the enterprise software and operating systems, which really ensures that recurring revenue and high customer retention. And then you got Azure Cloud, which is sort of running second to AWS. And that's a key driver. So, while, the valuation of Microsoft may be elevated, it's actually a good candidate at this stage to actually maybe sell some calls. Volatility is up, so you'll get some decent premium. Rather doubtful that, so sitting around 480, you could take I do the calls pretty short dated, like 1-2 weeks, because there's so much incoming rhetoric that's affecting the market. So I'd keep it pretty short. And then just write a call against it of, around 490, 495.
Right, and
strike.
And that's reducing your acquisition cost for the stock.
Absolutely, you get a bit of income.
Yeah.
When you see stocks like this, and you'll see a lot of them these days, this is a ripe environment to actually write some calls.
We've got Craig on the line from Kelowna, BC. Craig, go ahead, please. You're on the air.
Hi, thanks for taking my call. My question is about Micron, and I see recently they've announced plans for a $200 billion plant for chips. So I'm wondering, this ties into sort of the geopolitical risk, if there is any, with the China and Taiwan about the Taiwan semiconductor. But what I'm trying to understand is, is there any real significant risk of Micron taking market share from Taiwan Semiconductor? And my last question is it even the same chip functionality? I'm just trying to understand. I own Taiwan, and I'm just wondering if there's any real risk from Micron in this announcement to bring those chip manufacturing back to the States. So that's my question. I'll hang up and listen to your answer. Thank you kindly.
That was a good number of questions. So let me just try to quickly go through it. So Micron, currently trading around 120, recognize that, so Micron plays in the memory and storage technology size with DRAMs and NAND products, which are non-volatile and rewritable storage devices. So it's a really, really cyclical business. And so we have a 12-month price target of 142. Again, it's not that long of a runway here, but recognize that it is a very cyclical business. It's sort of like a lot of the energy complex. It's a cyclical business, and so you can have oversupply and undersupply and so on. Now, competition with TSMC. Not really. I don't think so. TSMC is a pure foundry, very agnostic, so they don't actually do any of the designing themselves. And so I would say the main competition to Taiwan Semi would be Samsung. Micron is just sort of a different corner of the whole semiconductor market, so it doesn't that much compete with Taiwan Semi. Now, you're right. It was just this week, last couple of days, that they announced a $200 billion. Now, recognize that, these foundries take years and years to actually build, whether it actually happens. Taiwan Semiconductor, they said back in Trump 1.0 that they were going to invest into Wisconsin or Michigan, but it never happened. Now they said, we're going to invest, 400, 500 billion into Arizona. Now they've broken ground. But I wouldn't really sort of consider Micron, but just please recognize that it's not a long-term investment. It's a tradable because it's a cyclical type business.
Okay, so that's interesting. Yeah, you get a glut of devices and then prices go down.
Yeah.
Okay.
Yeah.
Craig, thanks for the question. Henry is in Vaughan, Ontario. Go ahead, Henry, please.
What's your long-term view on the QQQ? Thank you.
Thank you. So that's the ETF that tracks the NASDAQ 100.
Yep. Well, Henry, again, I think if you own the Triple Q, I would be writing some calls. Don't get called away. You just got to be on top of it. And be ready to actually roll up the strikes. But I would keep the calls into pretty short maturities of 1 or 2 weeks, because as you can see in the chart, it's within 1 or 2% of the peak. You buy it on the weakness and you sell it on the strength in here. Yeah.
Okay, so meaning. Sorry, Kim, I don't quite know what you mean there.
Well, it's sort of the famous Warren Buffett,
Sure.
You sell when everyone is scared,
sure.
and you sure. buy when everyone is fearful.
Right.
And that's how we actually play in the Triple Q. We use the Triple Q as a proxy before we, if we see an opportunity to either buy or to sell, we'll go to the Triple Q, and then we'll get down to the single stocks, and then we'll trade out of the triple Q, and then we'll trade out of the single stocks.
Okay, we are going to take a break. We're going to check out Kim's past picks when we return. Kim was on our show June 19th of last year. Now, his first idea was Infinian Technologies, this one holding its own over the period.
Well, it's better than the second and third one. So Infinian, we still own, and it's sort of scattered through quite a few of our portfolios. Surprising, it hasn't done better because this is it's out of Germany.
And it's a chip-related stock, is it, Kim, or what is it?
It's a semiconductor. It's a semiconductor company that caters to the electric vehicle and sort of digital automotive industry.
Right.
Okay. And they've really sort of been the kings of that. Now, they have not been picked on with selling into China. So we should just sort of keep that quiet because they still make a heck of a lot of money out of China. But anyway, so they're into automotive semiconductors, well positioned for the electric vehicle growth. Recent results and guidance suggest that the bottom is behind us, and sequential growth across all its segments and margin recovery is expected. They just bought the automotive Ethernet side from Marvell, and that sort of enhances their whole profit offering, and it fits in well on the margin profile. So it's getting a little rich here, but it should actually. So we own it, but we've been writing some calls against it because the price target is pretty close.
Okay. Now, your next one, suffering over the period. Now, the NASDAQ 100 is up about 10% since June 18th, 19th of last year. Microchip Technology, this one down. Remind us what they do, Kim, and why is the market not keen on them, or has it not been keen?
Well, what we were thinking a year ago, and so here we were a year and a half into the whole generative AI. We'd gone through the infrastructure, we were in the modeling, and we thought that the sort of analog side, less about the memory and less about the computational side. So what Microchip is known for are microcontrollers and microprocessors. And so, and also into analog and sort of interface products. But they're not very sexy. Probably the sexiest thing they have is the field programmable gateway array, which is a microprocessor that you can actually recode on. And so, they're involved in a lot of markets, automotive, industrial. They bought a company called Neuronex AI Labs, so they're making some hay in the AI side. But we bought it back in May, June of last year, and then the price action, it just wasn't right, and it wasn't meeting our expectations. So we actually sold it in the fall.
Okay. And then your final idea is ON Semiconductor, all chip names today. Now, this one down as well, Kim. Remind us what they do, where do they fit in to the industry, and why are they out of favor?
Okay. So ON Semiconductor, or what they're sort of known around as ON Semi, they're out of Arizona. So what they do is they provide power technologies for the semiconductor industry and also sensing. So it's not into the GPUs, that Broadcom and NVIDIA and AMD do. It's the less sexy side of the power and sensing. So a well-run company, they've recently reported, and they've beaten the top and the bottom. They actually raised their guidance. It's pretty significantly, but it's just not a sexy business in this environment of AI, right?
So people are just looking for something with more gas right now.
Yeah.
Oh, okay. We have got to take a break. We're going to be back with Kim Bolton of Black Swan Dexteritas, taking your questions on technology stocks. 1-855-326-6266. We have Sam on the line from Ottawa. Go ahead, Sam, please.
Hello, good afternoon, Mr. Bolton. Thank you, Andy. Just a couple quick questions, sorry. AMD and Shopify, so I've been buying AMD for the last couple of weeks, and with the whole thing in Saudi Arabia. And Shopify, I feel very underrated, is because they have a Shop Pay and all these new things that are coming up. And I think that Shopify, they need to do something with Shop Pay. If they can, it's a huge business on its own. What are your thoughts for summer? Thank you so much.
So AMD and or Shopify, Kim?
Sam, it sort of sounded like you were more skewed toward the AMD. However, I think I'd be more skewed to the Shopify side. Mainly, and I guess, Sam, the reason I say that is, we look for the trending themes out there. Both of these are involved in that, in sort of Shopify and the e-commerce, and then you have AMD and the sort of the whole AI revolution. And I guess for AMD, it's pretty fully priced. Like, it's currently trading right now at 127, yeah. And we actually have a 12-month price target of 128.25. So, Sam, this is a great candidate to actually sell those short-dated calls against it, if you own it. Now, on Shopify, it has a little bit more of a runway here. And so Shopify currently trading at 107, and we actually have a 12-month price target of 125. So I guess for that reason, I'd be more skewed, completely different sort of businesses that they're in, but just based on the runway and how much upside, I'd be more bent toward the Shopify. But don't sell the AMD, Sam. Just raise some calls against it.
Okay. We've got Ryan calling from Saskatoon. Go ahead, Ryan, please.
Hi, Kim. My question is on Salesforce. Just wondering if you'd be buying at today's prices and your future outlook for this stock. Thanks.
Okay. Thank you very much. Salesforce, CRM.
Yep. So currently now trading at about 256, and we have 259, and we actually have a 12-month price target of 3.25. So it's very sort of puzzling that this one has not performed like the rest of the market. They've tried really, really hard in that whole Einstein stable to actually bring out the agentic AI side, the agents for them. But they've actually found that it does need some human intervention. So we actually own it. It's a fantastically run company, very, very aggressive on the sales and marketing side. And so, yeah, I wouldn't say it's in the top 5, but it would definitely be in the sort of top dozen of our holdings.
Oh, okay. We've got Rick in Toronto on the line. Go ahead, Rick, please.
Well, hi, Andy. Thank you. Kim, I've got a question for you. I bought Coreweave, CRWV, at its IPO. Well, its IPO was 140. I bought in there, and it went down to, it was at 40, then it went down to 35.
Yeah.
And today it's around 120, and I'm just deciding if it's a long hold or whether I put a fair bit in or whether it's time to get out and take the money.
So
thank you.
I have it at 170 right now, but the IPO, sure enough, was just there earlier this year. It was only $40, so it's gone up. And a software company, can you remind us what they do? What's their specialty, Coreweave?
You know, one of the big attractions about Coreweave is that NVIDIA owns 7% of it, of the stock. But all the other sort of hyperscalers are also very interested in it. Up at 170. It has, you know, sort of premium multiples. It's still losing money. So it's gone from 40 to 170. But there are so many positives that you can talk about it because it's cutting edge. It doesn't have sort of the baggage of some of the other sort of hyperscalers out there. So they're very, very quick to pivot in the marketplace with both hardware and also software in their data centers. They cater particularly to sort of smaller or medium-sized companies based on pricing. But I think up at this level, you just got to be very conscious about, you know, sort of the widening losses, the heavy reliance, and they got a heck of a lot of debt, which is and it's expensive, but they need that for the capex in this. So, you know, with falling GPU rental prices and, you know, the rapid tech obsolescence, you know, those could also sort of threaten Coreweave. So up here, I don't even think I'd be writing some calls against it. I'd be taking some profit because I think you'll see it under 100.
Oh, yeah, and we're having trouble with the chart right now, but the stock around 171 today. Kim Bolton is taking your questions on technology stocks. We'll be right back. 1-855-326-6266. This is 66. Kim Bolton is taking your questions on tech stocks. Greg is on the line. Go ahead, Greg, please.
Yes, good afternoon, gentlemen, and thank you for taking my call.
Pleasure.
Kim, my question is about Marvell Technology. Have you seen this year, since the beginning of the year, it's dropped about 30%. However, in the last month, it's gone up 20%. Today, it's getting a really good bump because of its announcement about partnering with Empower to improve the chip efficiency and power consumption. And they're, you know, announcing a bunch of big deals. And if I'm not mistaken, I think they're the chip of choice for Amazon on AI. So my question is, in terms of looking forward on this, and I've averaged down on it because I bought it a bit higher, where do you see this stock going in the next 12 months? And perhaps you could comment whether or not you actually hold it. Thank you.
Thanks very much.
Thanks, Greg. Yes, we own it. And it has a pretty decent runway of a 12-month runway of $108. And it's currently sitting here at 74. So for the rest, Marvell is very well known, and it's not surprising that Amazon uses it because they're sort of the king of the what's called system on a chip architecture, right? Because so normally you'll have the computational power being done in the data center and then sending it out. It's sort of the instructions as a result of the computations that are going on. What they do is what is called edge computing, and they actually put the chip out with the devices, and so that's why Amazon is very excited about this. So they're a data center / network / sort of edge computing company out there. They partnered with Dell out here, also with the AWS, also with Google Cloud. They reported back on May 29th. They beat on the top, beat on the bottom. That's why the whole thing popped, and they raised their guidance. So they delivered record revenue in the first quarter of just shy of $2 billion. That's 63% increase over the last year. So they're just running on all cylinders here.
So you'd say this name has momentum?
Absolutely,
right now? Oh, okay.
Absolutely.
Right. Douglas is calling from Winnipeg. Go ahead, Douglas, please.
Yes, good afternoon. I'm pleased to hear Mr. Bell. I always enjoy your programs, and your personality is reflected on it.
Thank you. My wife said enough of me, let me tell you. But anyway, carry on. Thanks very much.
Okay. Also, Mr. Bolton, I value your advice and do wish to know you perhaps have an individual perspective on what Tesla is doing and where it's going.
Thanks very much.
I'd like to hear it.
Okay. Nice to hear your voice, Doug. I know Doug. He's a client of ours.
Okay.
Yeah. Doug, Tesla, as I've learned, is not particularly an investment, but as a security, it's a trading security, and you can see it in the volatility that you can see on the chart there. So currently, right now, trading around 324. So, upwards of around 350, we'll start sort of writing some calls against it. We have a 12-month price target of 410. So a full position for us in Tesla is sort of between 5 and 6%. But we're constantly trimming it, and you buy it down. If you can get it under 300, it's a great buy, and you can sell it above sort of 350. Tesla is interesting, and it really deserves that premium, certainly versus the other automotives, but even in the technology world. Because we think in the long run that Tesla's money is actually not so much going to be made. Yes, it will still be in electric vehicles, but it's in robotics.
Including robo-taxis?
No, robots. So Elon Musk has said that in 2026, they'll sell about 20,000 of these Optimus robots.
Well, what do they do, those things?
The Optimus robots will be for people like you and I. Sure. But the robots that they're working with right now are actually on the assembly lines. Right. In the Tesla. So he's had a few venues where he's had these Optimus come out, and we very much think going into 2026, the big trend is going to be in the robotics.
That's interesting. Yeah, also known as the Tesla bot, and it's a robotic humanoid.
Yeah.
Okay.
Yeah.
That's interesting, because we hear a lot of, robo-taxis, but you don't hear that much about the
It's going to be huge.
Yeah. We've got to take a break. We'll get Kim's top picks after the break. Join us tomorrow on Market Call. Chris Bloomis is our guest. He's portfolio manager at Raymond James Investment Counsel, and he'll take your questions on North American large caps. And if you ever miss Market Call, as if that could ever happen, but in the unlikely event, check out our daily podcast. You'll find it on iHeartRadio and other platforms, and you can watch full episodes on our YouTube channel. Let's get to the first idea. Spotify. What attracts you here, Ken?
Well, they're the leader in the audio side, and you can see it in the stock. It has tremendous momentum, and even during that slump through sort of March and April, it came off a little bit, but you can see that there were buyers. So, Spotify's profitability surge is driven by its premium pricing, its ad growth, lower podcast costs, and it's really transforming into this cash-generative audio platform. And they're really getting into the ad-supported revenues. It's accelerating. Now, for this one and the other two, I do recommend that you do a third. Mm-hmm. So right now it's sitting at around $7.10. We actually have a 12-month price target of $892, so it's got quite a ways to go. And so I'd buy it here at $7.10. I'd buy some more down at $6.75, and and then again, I doubt that you'll see it, but maybe you could get it around $6.40. So yeah.
Okay. Spotify it is. Roblox, big player in video games?
In video games, but it's amazing how much money they make, because the majority of their customers are under the age of 18. Mm. But they also feed into the developers actually have it. So, Roblox's user growth is accelerating. It's driven by these viral new experience and strong engagement, and concurrent users are up 25 to 30% year over year over the last 3 years. But they're not stopping. So Roblox, just to sort of back up. So what they do is that they develop and operate online entertainment platforms. So it allows players, gamers, to actually create their own games.
Okay.
And so for those under the age of 20, this is their nirvana.
Create their own games.
Yeah. So they actually, last year, there were 20 million new games that were built in the Roblox studio by users, but also working with developers. And you can see where this is going, because this is where AI is really playing a big. So they actually now have these agentic AI agents at the Roblox studio that will actually help both the developers, but also the clients out there. But they're not stopping, because they're big in the U.S., somewhat over in Europe, but now they've started to go down into Southeast Asia. One of the fastest growing markets they have for them is in the Philippines and Indonesia. The whole monetization strategies are evolving. They have lower in-app prices, and that's offset by higher payer conversion. They also they have this commerce API integration. It's in the early stage of advertising that they're going to put on their platform. So, and they make a heck of a lot of money. They currently have, what is it, 600 million monthly users.
Wow.
Now, that all sounds great, but they're also spending a lot of money. So they're not profitable. They had a net loss. They just reported back at the beginning of May, they had a net loss of $215 million. But the daily users are actually spending just over $12 a day. So it's just a great business that is accelerating on the top line. Revenue is growing over 30%. Bookings are growing over 30%. And they really expect that their community is on pace to exceed $1 billion of creator earnings for this year. $1 billion in this Roblox studio.
And then finally, Adobe, long-time tech player. People are worried. We're tight for time here, but people are worried they may have missed out on AI to some extent. What's your take, Kim? Sorry, we're tight for time.
Yeah. Okay, so, but it's cheap, right? It's trading just under, 380. The average analyst out there actually has a 12-month price target of 650. It sort of reminds me of like IBM or Oracle, who just hadn't got on to the current trend. But, Adobe has come out with Firefly, and we think it has more upside than downside.
Okay, Kim, thank you very much. Kim Bolton, thank you very much indeed for watching Market Call. Remember, Chris Bloomis is up tomorrow answering your questions on large cap stocks. Have a great day in the markets.